by Gelsomina Vigliotti, Vice President of the EIB, and that will be followed by a short keynote of Maria Albuquerque, the new commissioner in charge of financial services. And then we will have all the panelists come on the stage and we will have a panel debate. So without further ado, Gelsomina, please, come on.
Good afternoon to everyone. It's a real pleasure and honor to be here with you and to introduce this panel tonight. When I was asked to open the panel, I immediately thought about talking about the Draghi and the letter reports, which actually strongly call for filling the investment gap and removing the cross-border barriers here in Europe. But we all I think that all of us almost know this report, and now I think that what is important is to focus on the actionable solutions that can contribute to the completion of the capital market union, or maybe we should better call it the savings and the investment union. So, but you know, for the way of tradition, I will continue with the capital markets union. A few months ago, Deborah presented the latest EIB investment report, and I'd like to focus on three messages that are, I don't know if it emerged clearly in the presentation, but there are in the report. First, that the finance is a key for innovation. Europe is already a research and innovation powerhouse with a strong industrial research and trade base. But we are not using it at our potential. We are not using it at the full steam. Second, Europe is wealthy, but this wealth remains mostly unproductive, also because of the fragmentation of the EU capital markets. Third, the public sector, whose resources are not unlimited, has an important role to play by supporting targeted instruments and coordinated at EU level, and this was in one of the last slides by Deborah. All the messages, and in particular these three messages, add to the urgency to move faster in the direction of our capital markets integration. Now let's pass to the actionable and what the EIB can do. And actually, you know, with a little bit of modesty, I can say that for more than 6 decades, the EIB has been at the forefront of this mission. And I think that we can all say that this is a successful example of how Europeans can put together resources and achieve objectives. We have pioneered EU-wide financial instruments that laid the foundation for true capital integration. And since last year, with the arrival of President Calvino, the Capital Markets Union is also one of our 8 strategic priorities. So let me quickly introduce some of our initiatives that are ongoing, but that are still to be developed to contribute to the mission. First, we are improving the market integration for green and digital bonds. We are doing so by scaling up our bond acquisition, but also by issuing bonds, also via blockchain-based solutions. And since 2007, when the EIB issued the first green bond in the world, we reached the 100 billion euros milestone of green bond issuance last year. I see Cyril on the first row. Thank you very much, Cyril. We leverage on our experience in the securitization market to make the European financial system more liquid and better capitalized, conditions that are necessary to support investment. We are scaling up support for the EU venture capital and private equity markets to make sure innovative entrepreneurs can start up, scale up, underline scale up, and thrive here in Europe. We launched the European Tech Champion Initiative, and I'm sure that Marjut later will talk more about it. It is now Europe's largest fund of funds. It's enabling European large funds to invest in the most innovative European companies to ensure these have the resources needed to grow and stay in Europe. And we are already working on a European Tech Champions Initiative 2.0, which aims to attract private investors as well. We are looking to private capitals to join us. Last but not least, we are teaming up with the Commission on the TechEU investment program to support disruptive innovation, strengthen Europe's industrial capacity, and scale up companies to boost Europe's competitiveness and strategic autonomy. Yet the EIB alone cannot fill Europe's investment gap. We are all aware that there are other issues which are relevant, regulatory challenges such as harmonizing tax systems, corporate governance, insolvency regimes, and rules for insurance and pension funds. And this is why we are looking forward to the upcoming Commission's communication on Savings and Investment Union, and we are particularly grateful to Commissioner Albuquerque to be with us tonight to talk about this new forthcoming initiative. And also I think that all the others distinguished participants in the panel will offer key perspectives on how to move forward this agenda. Thank you very much.
Commissioner, please come to the stage. Maria Albuquerque.
Thank you very much. I will be brief in these remarks. Good afternoon, ladies and gentlemen. I'd like to start by thanking the EIB for putting together such an interesting and timely event, and for inviting me to share my views on how the Savings and Investments Union can unlock financing for future growth. I am delighted to provide a few opening remarks before we get into the detailed discussion with this remarkable panel, with representatives from the European Parliament, the European Stability Mechanism, and key players providing equity for both from the public and private sectors. I'm really looking forward to an interesting and meaningful discussion with you all. So if we look at the current state of affairs in our European capital markets, it is painfully obvious they are operating far below their potential. And this is to the detriment of all Europeans. European savers have no easy way of getting more out of their hard-earned savings inside the EU. A significant part of their money sits in low-yield deposit accounts or even cash, amounting to something like 10 trillion euros at the end of 2023. Mobilizing even a very small part of this amount can transform the investment landscape in the EU. There is a mismatch in Europe between the abundance of idle savings and companies that need investment, including our European startups and scale-ups. This mismatch has been widely recognized, as has the European Union's competitiveness challenge. The momentum for change seems to be there now. Last year, the Eurogroup in inclusive format recognized the urgent need to advance the Capital Markets Union, a priority which was reaffirmed by EU leaders soon thereafter. This focus has been further reinforced by the landmark reports already mentioned here today by Enrico Letta and Mario Draghi, all highlighting the critical importance of strong and integrated capital markets. These reports both support the need for our Savings and Investments Union. We know what the problems are and the reasons that prevent us from being more successful, more competitive, and from addressing the demands and the needs of our citizens. And now it is the time to act. It's the time for solutions. The Savings and Investments Union, and allow me just a brief parenthesis to say, this is not a rebranding of the Capital Markets Union, it is a broader concept. It includes the Capital Markets Union, but it also includes completing the Banking Union, because the two of them need to go in tandem to actually deliver the result that we need. and a very special focus on retail investors and how we can find better solutions for them. So it's a broader concept. But the Savings and Investments Union will focus on supporting household wealth creation by increasing the returns on savings of EU citizens while widening the financing opportunities for businesses as well. In essence, the Savings and Investments Union will create the conditions to channel the savings to the most productive investments. It will allow us to meet our needs to finance innovation, the green and digital transitions, as well as infrastructure investments across the EU. And importantly, also defense. As announced yesterday by President von der Leyen, Rearm Europe will rely significantly on the mobilization of private capital, making the Savings and Investments Union a key enabler to this objective as well. And the EIB will also play a key role in this plan. Achieving all these goals implies scaling up the investor base, promoting the participation of retail investors in supporting the real economy. Obviously, this is not to say that the Commission will decide where citizens' savings need to go. Rather, the Commission's objective is to make investing easier and more appealing. Our crucial task will be to bring down the existing cross-border barriers and have the buy-in of member states to reap the benefits of the Savings and Investments Union. Because the Savings and Investments Union cannot be built by EU-level actions only. Many of the barriers depend on member states' decisions, such as taxations, pensions, or corporate laws, just to mention a few. We do need a combined top-down and bottom-up approach. Of course, taking steps forward will require political courage, and I am under no illusions about how challenging this will be, both technically and politically. But the costs of not taking this step forward would present the EU with an even greater challenge, so I am convinced that this is the path we must follow. The communication on the Savings and Investments Union will be presented on March 19th, and it will outline the overall strategy to bring this to reality. The EU continues to be committed to our ambitious goals as we strive for a greener, more digital and fairer Europe, and more secure. However, we have to recognize that these aspirations will remain out of reach with an underperforming economy. And in the EU, there is wealth, there is ingenuity, there is innovation. Let's bring them together to promote a more competitive and prosperous Europe. Thank you. I'm looking forward to our discussion.
Thank you so much, Commissioner. May I now ask the remaining panelists to join us on the stage? Michel, Marjut, Pierre, and Aurore. So we have Michel Capiod, the co-founder of Blume Equity, Marjut Falkstedt, the CEO of the European Investment Fund, Pierre Gramegna, the managing director of the ESM, and Aurore Lalucq, who is now the chair of the ECON committee of the European Parliament. This is good, yes. Excellent. So, having heard from the public sector, I want to start with you, Michel. So you have, in a sense, the view from the trenches, and in particular the view from young firms, no? Because you mainly invest in startups. So basically, I just want us to tell you what you need. What you need for this market to grow. So the theme here was Europe is punching below its weight. Why is it in this area? What would you like to see change, particularly on the side of the official sector, but more generally?
Thank you, Jeromin, and great pleasure to be here. And thank you very much for that introductory speech, Commissioner Albuquerque. It's music to my ears. Let me start by saying that I think the Savings and Investment Union is a crucial initiative at a pivotal time for Europe. We really have a unique opportunity to create a sustainable and resilient economy by investing in technology and innovation, which is close to my heart. Speaking specifically about startups, we have exceptional innovation, research and talent in Europe, as we have heard throughout the day. Startups are truly the growth engine of the economy for the future. And if we invest into startups, we have the opportunity to create trillions of dollars of wealth and millions of new jobs in Europe. However, over the last decade, Europe has fallen massively behind the US. On a macro level, we have an $11 trillion nominal GDP gap, but more fundamentally, as we've also heard throughout the day, a productivity gap and a lack, historically, of investment into technology and innovation. I'd like to share 2 data points from Deal Room that put this gap into perspective. In the US, a quarter of all jobs are venture-backed tech companies. In Europe, the corresponding figure is a meager 2%. Another benchmark, the S&P 500, is valued at some $46 trillion, and the breakdown of that is 65% derived from venture-backed companies. The Stoxx Europe is worth 15 trillion, so a third, but let's set that aside. Only 13% is derived from venture-backed companies. And this is essentially a result of our historical lack of investment into startups and VCs. So what do the European startup ecosystem need to help fuel both the growth as well as the competitiveness of the European economy? In my mind, there are many things we need, but I'd like to highlight 5. Education, more capital, obviously, incentives, simpler regulation, and a functioning equity capital market. We need a cultural mindset shift in Europe towards long-term investing, entrepreneurship, and risk-taking. We need education at every level, from institutions to individuals and from a young age, to understand the relationship between risk and reward and the power of compounding from investing. Startups need more capital, private and public, to scale up. In Europe, we have a $375 billion growth capital funding gap, with European startups only half as likely to raise capital as their US counterparts, specifically for growth rounds. Private capital investment incentives are key, and I think we've heard this as well, both from institutional and retail investors to take risk associated with venture capital incentives. Startups also need tax-efficient employee incentive schemes that enable employees to participate meaningfully in the upside of the companies they work for. On the public side, larger and simpler government funding programs are really key. And I think government support is clearly crucial for ensuring the energy transition and cheaper electricity, industrial decarbonization, and for certain strategic sectors that are essential for our long-term economic security. European regulation is a topic of its own, but let me just say it needs to be made much, much simpler, and we need more carrot and less stick. Today, unfortunately, the most successful European companies choose to list in the US. And some of our most valued publicly listed companies in Europe choose to move their primary listing to the US in order to achieve a substantial re-rating of their shares. Our best companies are leaving Europe at the moment, and we need to stop this urgently. I'd like to emphasize the strong equity capital market is crucial, not just for startups that want to IPO or VC investors who want to have an exit, but more fundamentally for European economic prosperity, individual savings and pensions and wealth creation. So that's my few cents. Thank you.
Well, you got our challenge cut out for us. Marjut, I turn to you next because, in a sense, you sit between the public and the private sectors. No, you're the connector, and to some extent, this is your agenda. You've worked on it for a long time. So, tell us basically what has worked in the past, what is missing, how much progress have we made, why you're hoping that this time we will do better.
Thank you very much, Michel, and that was not only a few cents, it was worth of a couple of euros, what you were saying. Now, let's start with the positive side. A lot of good work has been done in Europe in the last decade by the public and private sector in reducing the fragmentation of the venture capital markets and private equity markets, and in deepening the venture capital ecosystem. So a lot of good work. And this has helped that so many innovative companies have found founders, so enough financing to grow, to potentially become the global leaders. And there are many, many unicorns that have been created in the last decade in European Union. All good news. But then, when we look in particular at the growth stage of these companies, a lot of this financing has come from non-European sources. Is it a good thing? Is it a bad thing? I leave it to you. Now, also positive is that, as you said, there's a lot of talent. And many thousands of tech companies are created per year in Europe. All these tech companies, they want to become global leaders. They have an ambition. They believe in their technology and think that they can make a game change for us, basically. However, we have underfunded our tech companies. Now, since many decades, we have underfunded. What we would need is, as you say, when we compare US to European markets, in Europe, we should have a firepower of at least 8 times more in a year in venture capital investment compared to what we have today. It would basically mean that, for example, EIF should invest twice as much as what we do now in private equity, venture capital, and private credit. Today we invest 7 billion euros. We would need double. Now, when we then look further and we talk about the manner how we attract investors, and we talk about private sector investors, we talk about pension funds, there are many excuses why they are not investing. Currently in Europe, pension funds could invest 3% of their assets into venture capital, and they invest 0.02 annually. So, what are the excuses? That there is not enough access to performance data, for example. That they cannot make the investment decisions because there's a lack to data, performance data, and they look at us in the EIF, please do something. Now, I can tell you that by summer this year, this excuse is gone. We are working together with our stakeholders to be able to provide historic venture capital performance data on aggregate basis to all investors, institutional investors. And this will help, first. Then we come to the regulations. No, we cannot, in the EIF, we cannot change regulations. But certainly the European Commission can, and the member states can. Because what is at risk with this savings and investment union is that what I see is, in fact, there will be many national initiatives boosting the national agenda, which is not always helpful then for the European Union agenda, for the savings and investment union, what will be the whole strategy that will be proposed. And we need a very strong coordination there. And then, as a final word, just a good news that Gelsomina was alluding to. This is about scaling up. Indeed, we have this wonderful instrument called European Tech Champions Initiative, which started with 3 billion euros, and we are now looking in the next generation. Our ambition has to be very, very high, and we need all member states on board, and we need the private sector on board to make a quantum change, a real game changer in European Union. Because this is what we need. We need the European Union investors. And then last words about governance and about speed. We cannot have multiple layers of decision-taking, when we are investing into innovation. It has to be fast. And who are the fast? Who can do those independent decisions? Well, they are the venture capital funds. It's a fact. So let's let the market to do the business. Give them the sources they need in helping us to making this quantum step in narrowing the investment gap towards towards Americas. We might not be able to close it, but we can very well be in the position to narrow it significantly. Thank you.
Thank you so much. Aurore, well, congratulations on being the new chair of the ECON committee of the European Parliament, but
Thank you.
You're not just the new chair of the ECON committee, you're actually an expert on the subject that we are talking about, the Capital Markets Union. You're the rapporteur on a report following up on Draghi, and you have been in this business for a while, so many arguments come back. Are you hopeful that, we are about to make a breakthrough? What will be different this time around? It's been a 10-year agenda. We haven't made all that much progress.
First, good afternoon, everyone, and thank you for this invitation. And I just want to say thank you also to our commissioner, because she is going through crazy time right now because we have a tough situation in Europe, and I know it was not easy for her to make it. So thank you so much for being here with us. It's very, very important. I want to be positive and look at the bright side of life today. And I think that, as Commissioner said, there is a political will right now. This is my second mandate as a member of the European Parliament, and during the last mandate, no one was talking about the CMU anymore. Capital Market Union, no one was talking about it. And then there was a Draghi report, the Letta report, and something was happening. And right now we have this panel with a lot of very important people talking about not even the CMU, but the Saving and Investment Union. So yes, things have evolved very quickly, I would say. That's the first point, and that is a very, I think, important message. There is a political will from the European Commission, but also from the European Parliament, because the ECON committee published during the last mandate one report, only one, on CMU, but it was positive. So I think there will be some willingness to work on the CMU and on the SIU on the European Parliament side. What is also positive is that people from the ECON committee are starting to realize that it's not going to be an easy journey, because, when you're talking about the CMU, everyone is like, oh, it's great, we're going to have a lot of private funds to fund our economy, it's very important. Well, then you underline the steps that are necessary to complete the SIU, and well, it was important that people understand, that our committee understand, but you need to have a single supervisor, you need to have the harmonization of the regulation, as it was mentioned, some market infrastructure, etc. And then the trouble are beginning, especially between two countries. And I'm representing one of them, by the way. So I hope that there will be some political will also in the Council. But I have to say that in the European Parliament, I think that the members are ready to discuss these things, to exchange some views, especially on the single supervisor, which is, by the way, something very, very touchy, I would say. So this is why I'm also positive, because now everyone is understanding what the SIU is. We are able to exchange, and we are trying also to find some solution, even though I don't know what is the best solution. For instance, when we are talking about harmonization of regulation, should we create this 28th regime? Is it a good solution? We don't know, but we are trying to find some solution. So this is why I want to be positive. Also because I think that we are really fool or crazy people if we keep on if we don't find a solution to make sure that our savings do not go in the US to fund the American companies that go buy in Europe and buy our own companies. At some point, this is crazy. So I think that now, especially since what happened in Munich, and especially since what happened 1 week ago, people are starting to realize that frankly, this is not possible anymore from a political point of view. This is totally crazy. And last but not least, I was reading, I don't know if you have ever read this economic advisor from Donald Trump, Stefan Myron. He's obsessed with the Triffin dilemma. I don't know if you remember the Triffin dilemma. Triffin was an economist who was saying that when your currency is the international currency, then you have some contradiction between your internal goal, national goal, and international goal. And he's obsessed by things, he's obsessed by exchange rate, he's obsessed by the trade imbalances of the US. But he wants Europe to pay for it. And this is what they are using the tariffs, by the way. Instead of looking at the American situation and the fact that they have a very low level of savings, they are putting some tariff on Europe. So I think we were a little bit naive and stupid during those last years. But right now, we don't have the choice anymore. We need to be very tough on this, and we need to understand that this is, it must be a key priority for Europe, even though I understand, and as you know, I'm French, you can hear it with my very bad English accent, but I think that now the Council should also be helpful and trying to find a solution, just like the European Commission is trying to find one and the European Parliament is trying to find one.
Amen. Pierre, you...
I'm trying to be positive.
Yes, absolutely. I totally get that. So many interesting points which we'll pick up in the next round. But before we do that, Pierre, explain to me. You are the managing director of the European Stability Mechanism. Your job is mainly to prevent and mitigate crises, particularly by lending to governments in crises. So how does that relate to the agenda on this panel of mobilizing private capital?
Thank you very much for having me. It's a great pleasure and honor to be surrounded by all these powerful and intelligent women. I think it's the first time in my life that in the panel I'm the only man. But congratulations to the IB for putting this together. I would like to start by subscribing to all the things that have been said about the Savings and Investment Union, because I will, since a couple of weeks or months, I've been calling it that way. I have promised Enrico Letta I would do that, and I stick to it. But what you said about Maria Luís, that this encompasses more than just the Capital Markets Union is very important. So it's the two agenda items, the priority agenda items in the Eurogroup, which I attend now in my present job, which I attended for 8 years as finance minister. So these two topics are crucial. Unfortunately, I have to say they were crucial when I started as a finance minister back in 2013, and they're still on the table, and only part of it has been done. A part has been done, I agree with you, Marjut, but a lot remains to be done. Now, let's face it, the role of the ESM is not to directly help or support companies, or how could we do that? Because we are not supporting projects like the EIB or the EIF does, or like the Commission can support also with the latest announcements. What we do is ensuring financial stability, safeguarding the euro area. So for that, we have 20 countries, soon 21 with Bulgaria. But you could say that guaranteeing financial stability and supporting countries that have difficulties to ensure that financial stability, that are in a situation eventually to lose access to financial markets, well, this is extremely important. So we help indirectly. Now, we have been used over the years, in the last decade, and in fact, the ESM was forgotten when we did the monetary union, because we did not even think of the necessity to have it. So now that we have it, we take it for granted. But because we take it for granted, we should not underestimate its importance, and the importance being that the euro is very credible and stable, and that obviously helps companies find financing at a better price. So this is key. So we support countries. We did that in the last decade. We have also evolved in how we look at crisis. The first time this happened was with the COVID situation, where suddenly we had to think also about financial stability, what the impact of COVID crisis could be. And on the 9th of April 2020, the ECOFIN decided to have the SURE program of the Commission. The EIB decided a program of support of guaranteeing companies, and the ESM put forward a guarantee system, a precautionary loan called pandemic crisis support, which was not really used. There were other measures that were taken, but the mere existence of it, again, stabilized markets. Now, if we look at the situation today, the jump is easy to say. Now, obviously, we have a new challenge in front of our doors, which is defense. Defense issues, so here you could say, well, what we have done in COVID times, we could eventually do for defense purposes. So, in fact, the ESM is there to support countries directly or indirectly, whatever the origin of the crisis is. I think this is important to keep in mind. Now, the Letta report, in fact, mentions specifically the ESM saying that we could envisage credit lines, precautionary credit lines for those countries who would need it to ramp up their defense expenditures. Now, obviously, this is something that could be done. Then we need to discuss it at the level of finance ministers who are in the Board of Governors, and we have the 20 countries, and we are ready to open such a discussion if there's political willingness to do so. What I want to say about this, again, this is helping directly then on a specific issue, but it is not enough to mobilize money. We are talking about having sufficient money for companies, for startups, but you also need to focus on what you want to do with that money. And I think what we are seeing flourishing now is national initiatives in terms of financing of defense, but at some point in time, we should also need common action in the area of defense. So again, there you realize if we act together, we are stronger. So this is exactly what we're talking about when we talk about savings and investment union, is you need size. Size matters. So, and for scaling up, size matters. I think from hundreds of unicorns that have been springing up in Europe in the last couple of years, you have 1/3 that left Europe once they got to the level of 1 billion. It's a number that the Commission has calculated. So we have even the imagination and the innovation. We even have seed money, it seems, but when you want to grow, when you want to scale up, then you go on the other side of the Atlantic. So size matters. But then again, coming back to what our role is, we are there to ensure that our euro area is stable and strong. And let's not forget, Europe has always made strides and made progress on a step-by-step basis. The situation in which we find ourselves today with our traditional ally that is in a sense, starting to deconstruct the new international order piece by piece, I think we should not only be proud to be the champions of multilateralism and of rules-based commerce, this should encourage us to persevere and do even more. So this might sound like a paradox, but there might also be the temptation, and it exists inside Europe too, to say, well, times have changed, maybe we should choose a kind of national road, a national solution to this. I think exactly at this moment, it will be important to find common answers.
Great, thank you. Maria, if I may, I want to get back to you. I know you're not going to tell us what you're going to publish on March 19th, but there are a whole host of issues here that came up that I want you to react to. And the main one really is, if you can go maybe a little bit into the diagnosis of what is wrong when it comes to sort of the causes of these phenomena that we have been hearing. And, very broadly, the way I would formulate it is that, we have two broad set of stories on the table. One was mentioned mostly by Aurore and also by Pierre at the end, which is the traditional problem of collective action in Europe, right? So it's the point that we have exercised sovereignty mostly at the national levels, not necessarily in the collective interest, and the job of EU institutions is to change that because we can collectively all gain. And so initiatives like common supervision go in that direction. But on the other hand, I heard quite a lot, particularly from Marjut and from Michel, that didn't seem to be primarily about that, right? So it was about education, it was about sort of the mystery of why pension funds do not actually exploit their current regulatory scope to invest more. So this is more a story not necessarily about a collective action problem, but it's about common problems in Europe, right? So that we all have, and they may continue to persist. It maybe would exist even if we were a unified federal state. So we could maybe have the perfect union in that sense, and yet we would be lagging behind the US. So can you maybe address this a little bit and say, particularly from the perspective of startups and in financing of young firms, why the type of policy measures that we might now be contemplating and where we do arguably have more political will than in the past are the ones that actually might make a difference?
Thank you. It was very interesting to listen to you all and your perspectives. Going to your point, the word that keeps coming up is fragmentation. I think that is the main issue. Pierre mentioned about the need to get scale. Because when we talk about financing, when we talk about markets, you need scale, you need depth, you need liquidity. Why is it so difficult for pension funds to invest? The price discovery is close to impossible in such a fragmented landscape. You have no visibility of the opportunities. You find it very difficult to define exit strategies because you don't have efficient markets. Our problem is the lack of efficiency. And the sovereignty thought in national terms just means that basically we don't have one capital market, we have 27 capital markets. And none of them is big enough, not even the bigger ones. Even the 2 member states that you were referring to, Aurore, we are all too small. And I think it's high time that we have the necessary mind shift, which is we are not competing against each other. We are competing with the US, with China, not among ourselves, because if we continue to focus our competitiveness as an issue between member states, we will all die together, but we will never make it. Because simply we cannot do it like that. And I think that is probably the root cause of why we are lagging behind. And obviously I will refer to startup and scale ups, and it's really very important. But I also make a point always to highlight that the bulk of our corporate sector is not startups or scale-ups. And they desperately need funding. They need to transition to become more sustainable, to become more digital. They need those funds. They need those private funds. They are way too leveraged on debt. They need equity. And equity comes from capital markets. But again, capital markets need scale. So it is about the fragmentation. Fragmentation brought about by tradition, history, but too often protectionist behavior, rent-seeking behavior, vested interests, and we do need to tackle all of those head-on. Otherwise, we will not make it. The difference now is that I think there is a sense of urgency. I am curious to see how this sense of urgency will translate into action when we actually start talking about what is necessary to get there. Because the concept is very appealing, and I hope the measures will be palatable, and that we go from the concept into reality. We will see. I am hopeful because I think that now at least there is a clear understanding of the necessity to move forward. And the stimuli that we are seeing probably will push. I think that when we talk about the cultural mindset that we need to shift, people are all the same wherever they are. They react to incentives. If people do not take more risk, it's because they don't have the incentives to take more risk. So it is about giving people the right incentives, because when we see how many people in Europe actually invest in crypto, saying that they don't like risk does not seem to make much sense. They just don't have the right incentives to invest in risk where we would like them to, and where it would be important to see them invest. So hopefully the strategy that we'll be putting forward will be addressing these challenges and pushing decisively ahead. And I'd just like to finalize to say that indeed a lot has been done. And I think it is also important to recognize that a lot has been done. The public sector does support the startups a lot. When we get to the scale-up phase, to the entry in the market and testing in the market, again, the market is not big enough. It's too fragmented. Even the goods market is too fragmented on a single market economy, which actually makes no sense. And innovators need an ecosystem. We don't have an ecosystem. And when you talk to member states, they all dream to have their own Silicon Valley. 27 Silicon Valleys will not make it. We need one. I don't care where it is. It doesn't even have to be anywhere specifically. It can be connected virtually, but it has to be one and not 27. If we don't change this mindset, this is the mindset we really need to change. Thank you.
Gelsomina, do you want to come back on any of these points?
No, yes, thank you very much. It's a very interesting. Maybe I want to add a few elements. Maybe let's start from the risk. I completely agree with the commissioners about that. If there are people investing in crypto, maybe there is no risk. But maybe we are talking at least that within the EIB and also EAF, we are looking at the institutional investors, maybe to insurance, to the pension funds, and there, I agree with Marjut that there is an issue, on relying on performance data. But at the same time, since I think that within this sector, maybe the perception of risk is higher because of, because they have to preserve the pensions and the savings of others. I think that experience like we had in the past, like the Juncker Fund, to use, the public resources like a sort of guarantee to the investors to say, enter into these riskier activities, let's put your money there, and so that you have a final backstop, something similar. I think that is, and looking, for instance, at the experience of the EIF, what the EIF did, it was in many countries, it was to create the ecosystem for developing, venture capital, private equity. Then it's a national success that has to be transformed in a pan-European success. And so, within it, the EIB, we are reflecting on this. We are reflecting on the way in which actually how we can support the equity system, because actually what we heard is that what is necessary, it's equity. We know that public resources are limited, that maybe what we need is to mobilize the private savings, and we have to give them incentives. So, I wonder if, one of the solutions, not the silver bullet, but one of the solutions could be to use, the public resources for instruments which can provide insurance and to support people in taking risk. And just a final note, we're talking about the creation of the euro. You know, we knew that for the optimal currency union there were two missing elements. One, it was the labor mobility and capital mobility. And we know that in the US, many of the absorption of the crisis comes also through the capital markets.
That's right.
And that's why this is also important for for the success of the euro. And to me, we are in the time where, and I think that in the parliament also they're realizing that, now that, the time is now, and, Europe, it's very good in moving during crisis time. This is a crisis time, I think that the horizon to move and to take a decision, it's very short, and I think that confronting with such challenges, I think that it will be time that everyone can do its part and to develop initiatives and take action to cope with these issues.
When it comes to this risk-sharing function, of course, that brings me back to banking union. I was very happy, Commissioner Albuquerque, that you mentioned that SIU is broader than just capital markets union, and so you will get a question on that at the very end. But before that, I actually want to get Michelle to react to what you said. I also was, so basically, what is the right role of government of sort of intermediary institutions here? So I was somewhat surprised to hear you say you want larger government funding programs in the venture space. So coming from a venture capitalist, that surprises me, because basically they compete with you, right? And ideally, we don't want government to run this space. So what is so wrong about the current ecosystem that you want more government? And then to the extent that it's not about direct funding, what should the role be? So there's one story, which is somehow you guys are in a sense constrained from the funding side because of a culture of risk aversion, because somehow the plumbing to the big pools of savings doesn't work. Is it true, like Gelsomina implies, that a little bit of de-risking by the public sector can clear that flow and make it flow more? Or are we talking mostly about information problems, like you suggested? So it's really about providing transparency and so forth. So I'm really confused on what government and EIB, EIF, I'm now counting them as part of it, should really be focusing on, beyond the general defragmentation agenda.
I think when I say larger government funding programs, there are certain areas where venture capital is not well suited to provide funding because of the model under which we work. So I'm thinking first of a kind. We heard from Anne Mettler earlier today in terms of the need to fund certain projects that have long duration to first euro of revenue generated. They're very, very difficult to fund. So there are certain areas, particularly around energy security, industrial decarbonization, where we need efficient programs. It doesn't necessarily need to be equity. It can be matching funding, it can be bank guarantees, it can be various forms of incentives, but we clearly need a sizable public commitment to supporting some of these businesses. I also think that from a regulatory perspective, to unlock more private capital, to the points made, we can simplify some regulation, because if we get the equity capital markets to work and the pension funds who are invested in them actually make money, then they have more capital to invest into venture capital funds and private equity. It becomes a virtuous as opposed to a vicious circle. And so there are a number of regulations that essentially encourage insurance companies and the likes, post-Lehman, to invest into less risky assets, which I think is fundamentally wrong. Having regulation that encourages investment into non-productive assets is just not helping our economy grow and to create wealth. If we create wealth, we get a positive spin wheel where we also get savings and wealth creation at an individual level, where people are able to put more money into the equity market. So I think that that's really key, to the solution here in terms of driving that positive momentum that we really need.
And so this is really about the plumbing and the regulatory framework of equity markets rather than, you know, the underlying projects.
I think, I mean, if we're being brutally honest here, the liquidity in Europe is absolutely terrible. The price volatility we have in individual stocks, I can just give one very stark example. I think most people will be familiar with banks. If we take, for instance, BNP Paribas, the French bank, it's a well-run bank. Do you agree? Yeah. It's valued at 20% of the value of Morgan Stanley, and they have similar balance sheets. Why is that? I mean, it makes no sense financially speaking, yet this is the case because in the US you have a very strong retail and institutional investment landscape. In Europe, it just doesn't exist. And so I fully agree with, you know, we need some kind of unified market, perhaps a unified stock exchange. We need essentially to listen to the Draghi report. And I think we need to create perhaps a European sovereign fund that can invest into equities, like we've seen in some markets very successfully in Norway, for instance. I mean, there are lots of things that could be done, I believe, to create that momentum that we need. We could just, as a very basic first starting point, harmonize the trading hours between the different exchanges. I mean, there are things at different levels we could do to start creating a more harmonized market. I'll pause there.
I'm going to throw it over to the floor, but I want to ask one last question. I'm going to ask it to you because you sit on both sides. So this story about, which is not a story, it's true, about companies listing in the US and, you know, moving to US in some sense when they need to scale. So I'm never quite sure. Is this about scaling opportunities on the real side, possibly even about labor market flexibility, right? So is this about essentially product market barriers? So once you're in the US, you're the same idea, the same project, can just generate a ton of bigger revenues because you are in the entire market. Here you have to do it bit by bit. Or is this really about the price of equity being cheaper in the US? I mean, can you distinguish these things? And to the extent that it is about the size of the equity market to work something, is that in turn driven by just better scale in product markets?
Thank you. Now, I think Michel was very to the point. You were very much to the point. It's about valuation. If I am an AI company and I want to be the leader, I want to become the global leader, today I would go to New York. It is a fact. If I look at the AI companies in the States, they are 100 billion values. And when we look at the French, sorry for French again, we look at Mistral AI, it's 6 billion. We have an issue of valuations, and we have an issue of the liquidity. And as you said, so rightly.
So just to clarify, so you would go to New York even if your operations are in Europe or if they are global?
Absolutely, absolutely. I would go there for value. Look at Spotify. Spotify's headquarters continue to be in Sweden, but for the valuations, I would go to the States. And it does not mean that being exiting or being listed in New York that I lose my production capacity in European Union. This is not what it is about. It may be at some stage when the investors are such that they have a really strong say in the company governance. So that might happen. But my opportunities are there in this stock exchange are just much bigger.
Any reactions on that side of the panel? Otherwise, I would throw it open. Yes, Pierre?
I would like to say two things. One, just not to please the EIB, but if member countries would double their capital in the EIB, it would be a multiplier effect that would be spectacular. And I've not been paid to say that. I really believe that. The other thing I would like to say, it is a magic word that you have used, Jeromin, and that is the word de-risking. And also there, the EIB is a trendsetter and has done wonderful things. And this is a European way of doing things, taking the junior risk being covered So that's where you need public money eventually, and then projects become bankable. So, I mean, we can inspire ourselves in so many ways how to make it our way. This is not necessarily the American way. And I'm not saying that we should inspire ourselves a lot from what is being done the other side of the Atlantic, but there's also some recipes, I think, that we have in-house that we can, I think, build on and develop.
Thank you. Aurore.
Just a few words. Yes. Not to defend the French banks, by the way. They will be so happy, but this is not my kind. Sorry for the French banks. No, just to say, I have just one concern. When I think it was when Ursula von der Leyen, by the way, say we should mobilize private capital to fund the defense. I mean, we all know how hard it is to complete the CMU. And now the Civic and Investment Union. So it will take too long. I mean, we don't have the time right now. So there is this whole idea to have some flexibility from a fiscal point of view, but this is for a country like mine, but also for Italy. I mean, for a country with a high level of debt, it's quite complicating, I think, to have more debt, because there is something that is called the financial market. So yes, I fully agree with what Pierre said. We need to have a common tool at the European level, and I think that what we did during the COVID crisis could be used, and I think that your institution has a key role to play, because it could be easy, I think, to use this kind of tool, and we need to react very, very, very quickly. So national solution, it's okay, but I mean, we are all in the same situation, and we need to prove some solidarity, to be united. So I think we should also use what we have, and I think that the European Stability Mechanism could be very, very helpful.
Hello.
Hi.
Hi, sorry to surprise you. I just want to mention that two people have to leave at precisely 6. So if you want to give them the floor, it is Luís, Albuquerque. I know you have a plane to Warsaw, and I think Pierre Gramegna, you also need to leave sharp at 6.
I have continuously given them the floor, so no, I think the floor now belongs to the floor. So we're going to ask, but before that, I cannot resist just saying that, you know, in my view, raising defense spending in the EU is mainly a fiscal issue. So we're not going to do it mainly with private funding, right? Because this is about buying stuff that you're going to use in a war. This is not about funding projects that yield an economic return. So there is surely a role for private capital, but primarily we're talking about fiscal resources. I think that's clear, and in that sense, pushing everything also to promotional banks like the EIB is maybe not a good idea. But now let me make up on my, yes, please, sir, in the first row. So I do have a problem in that I do not see you. So you need to somehow get up and get a microphone. I will pool 3 questions, and then we'll go back, and that will be it. And please introduce yourself.
Thank you. My name is George Zavos. I'm the chairman of Hellenic Development Bank and a former Deputy Minister of Finance of Greece. My question relating to all the panel relates to the key ingredients of a capital markets union we're discussing now for several decades. And as we know from US experience, there are 2 important issues. One is a reinforced supervision at the central level, which at the European level, and that's the experience coming with the Securities Exchange Commission that's there for 100 years for the biggest capital markets in the world. And the second one is securitization. As a Deputy Minister of Greece, I made the Hercules scheme, which cleaned up the Greek banks from 50% of NPLs, which is now down to 3%. Why we cannot use this instrument at the European level to finance the double transition and many other things? Why are we avoiding this important and essential discussion?
Okay, securitization, something we have not talked about a lot. Anyone else? Oh, come on. Yes, please, in the back row. The gentleman here, yep. Oh, lady here, while you get the microphone, I have you on my radar. Please, introduce yourself briefly, please.
Luxembourg.
Yes.
I'm Tonika Herdman from the Foundation of Luxembourg. While listening to the European Commissioner, she puts really her finger on one of the very important issues, which is the lack of private savings in equity markets. And to me, it seems that this is a huge lost opportunity for the savers who lose out on capital gains, and for the corporates which needs capital. And in this respect, just allow me to share an example from my second home country, which is Sweden, which is where the savings level in equity markets is 7 out of 10 citizens are investing in equity investment funds. And one of the measures and reasons behind that is incentives since the 1970s in fiscal incentives. And the second one is the reform of the pension system, where Swedish citizens have to decide themselves of how part of their pension savings are invested while selecting among hundreds of private investment funds. So coming to my question, I think the Savings and Investment Union is a fantastic opportunity, but don't you think that we need other measures as well, such as incentives and education and awareness creation among savers?
Thank you so much. Gentlemen, go ahead, please. Very brief, please.
Yes, hi. Nasser Zuberi, I run the Luxembourg House of Financial Technology. I'm going to repeat the question I asked a previous panel, very simply that there is a general culture of fear of failure and of risk aversion in Europe at all levels, from individuals up into politics and policy making. How do we overcome this and what actions, if any, would each of the panelists take tomorrow to make a difference and change the issues and overcome the challenges we have in Europe and solve some of the things
you mean
that have been
all
discussed?
Challenges we have in Europe, or to make us less
specifically what you've been discussing, increasing private capital into markets? What one single policy decision would they make tomorrow?
Okay. All right, I think, Maria, you definitely want to respond, and then anyone else, feel free. So we have securitization, we have the question of whether we need essentially country-level pension reform, for example, or fiscal subsidies. And then there's the question about the magic bullet. Please.
Thank you very much. I'll be quick. And from the suggestion I heard from the audience, I think that you may not be surprised, but I hope you will be pleased with the Savings and Investments Union strategy once it comes out. Because what you mentioned is things that we have looked at. There are excellent examples in Europe. We will try to replicate them to a broader pan-European level. And yes, securitization is coming. There was a public consultation, as I'm sure you know, and we are now preparing the proposal, which, by the way, the Commission can only propose. Then it's up to the European Parliament and Council to actually approve. So just that we all know the role. So yes, education and awareness is very important. That is why I also have in my mission letter the obligation to put forward a financial literacy strategy, which also be referred to in the Savings and Investments Union. But the Savings and Investments Union will have many different measures, recommendations, legislative, non-legislative proposals. It's a package of measures to put forward. On the fear of failure and risk aversion, how to overcome, there are also tweaks on regulation we could put forward to make sure that the penalization for failure is not as severe. There are cultural elements, yes. I mean, we do not do TED Talks with people who have failed miserably. We typically call only the ones who have been successful, but that is something that is not up to the Commission, it's up to you. You have to change that mindset. It's not a legislative proposal that can do that. Thank you.
We all do. Any other remarks on any of the 3 points? Yes.
I would just echo what we've heard. I mean, to the question, what can we do to change risk aversion? Incentives and education from a very young age. Teach kids in school. They learn all kinds of things in school, but very few schools teach essential business economics and how to essentially save for your own pension. I mean, we're talking about a generation that are not going to have public pensions anymore. So I think it's a crucial thing to learn from a very young age.
Marjut?
Securitization, certainly securitization continues to be a very important part of the Savings and Investment Union. I will be convinced about it, as it is a really essential element for capital relief and risk sharing, so to say, with the banking sector. I'm sure that will continue. No?
So I came out more optimistic than I went in. Let's give the panel a round of applause, please.
Thank you so much to Jeromin and that panel. It was a really fabulous panel, and we're nearly at the end of the day. As Pierre Gramegna said, it was a very female-heavy panel. I think he said it was the first time in his life he was surrounded by a panel of women, and that, as we move into the last session,